Hey everybody, it is Seth, Paul, and Mo for the Everything Money channel. We welcome you back in as always. All of our new viewers, we've gotten so many new subscribers, Paul. It's been incredible. And of course, my dear patron, you know I love you. I see you there. Today we're talking about Teva Pharmaceuticals. This is a pharmaceutical company. They're a global pharmaceutical headquarters in, where is Petah Tikva? Israel. Oh my gosh.
Yep, Israel.
Paul, have you ever been to Israel?
I've not.
Mo, where were you born?
Israel.
Not Israel.
I was born in Baltimore, Maryland.
Yeah, that's near Israel, from what I've gathered. We're going to look at this today using our eight-pillar analysis. Look at the health of a company. This is a very highly requested stock. Now, Paul,
Is it highly requested, really?
we definitely off our Patreon request feed. Teva is a classic Warren Buffett stock. He bought a lot of this last fall. They are one of the largest generic drug makers in the world.
Why do you say a classic Warren Buffett stock?
That's what it says in this stupid article I pulled up.
Are you just reading off an article?
I told you once and before that, listen, if this is not the channel, we're just going to bring you the news and read stupid articles. We really want to bring Paul's opinion on this product and this company. And so that's what we'll do right now.
Am I going to try some of the generic drugs today on the show?
I'm sure they're running through your system as we speak. Tell us about Teva, Paul. The ticker symbol is, I have no damn clue. What is it? T-E-V-E-A. What a coincidence.
Like the shoes. You remember the Teva, the sandals?
I don't.
Oh, come on, Seth. You liar.
I swear. I mean, my little sister wore those jelly shoes throughout the
Jelly
80s.
shoes?
You don't remember those? You weren't old enough. You were in the same age as
Jelly
me.
shoes?
You
They were
don't remember
called
those?
jelly shoes?
They were like flip-flops that were clear. You guys at home remember this. But go ahead, Paul. Show us Teva on the beautiful Everything Money
Well,
website.
look at
How
yesterday.
gorgeous.
Yesterday, Teva was up 78 cents, 7% yesterday. So, okay. This is our Everything Money app, website. Every patron gets it for free, www.patreon.com/everythingmoney. All right, so to go down below, Teva is a $13 billion company. Oh, you want me to have it blacking, don't you? $13 billion company.
Actually, I'm wrong. I'm back on red, Paul. I love you.
Thank God, because I
knew
really
that
don't
was
like
that
the
was
black.
bothering you. Yeah.
They lost $4 billion last year. Sick joke. So no PE, that's an X. No profit margin, that's an X. Now remember, guys, I will probably be changing the first two
Pillars.
because of reasons like this also. But there are other metrics that I like a little bit more. No dividend. And last year they did $900 million in free cash flow. And the last 5 years, they've done $1.7 billion a year in free cash flow as an average. So their free cash flow is definitely bad compared to the previous 4 years, correct? So we have to figure out why that is. Remember, the 8 pillars isn't about saying buy or sell. The 8 pillars is about saying, what's the story here? What are the questions? So my first question is, why did they lose so much money last year? Based on revenue of $17 billion, have a $4 billion loss. I don't know if it's because of COVID or because of some write-off, because they did have free cash flow. So who knows? But either way, not great. Their return on invested capital, also not great. This is a 5-year number, negative 11.7. This is an important metric for value investors. It basically says, here's how much you're going to make buying this company. They reinvest their own capital. And capital is generated by equity or debt. So it adds up the equity and debt put into the company and shows the return you're getting from it, and it's negative right now. Not a good sign.
In 2020, Teva continued to provide essential medicines to millions of patients around the world every day. Despite the pandemic challenges, we saw minimal impact on our supply chain, R&D, and product launches. This is from their website. Following a strong fourth quarter performance, we have met all components of our 2020 financial guidance, and they're obviously looking ahead to 2021. So let's keep going, Paul. The first two pillars are not good, but let's look at revenue over the past 5 years.
Well, they didn't rebound here. They went from $20 billion in revenue down to $16 billion. That's an X. This is what's weird. A generic drug maker having a drop in revenue, because usually it's the drug makers that have the patents that are expiring that you'd see a loss of revenue. So don't we have like 18 X's already on our 8 pillars?
We have 3 for 3 X's, yes.
Okay, that ain't good to start. All right, net income.
Profit growth, which is pillar number 4.
Oh boy, 1.8 billion. Then they lost 5.7, lost 10.8, lost 4, lost 4. That's an X as well. Guys, I'm done.
Done already.
We'll go through the pillars. We'll continue going through it. But this is just like, to me,
let me cut you right off, because this is where you're going to get the comments. You don't get it, Paul. You don't
What
get
don't
the
I get?
growth. You don't get.
I don't. But what growth?
Let me just recall some of the. Hold on a second. One comment yesterday, Don, was the past tells nothing about the future.
Well, that's not true.
That's what I said.
That's not true. I mean, I get the fact that the past doesn't guarantee the future, but just like, let's draw an analogy here. Tiger Woods' this past with marriages. How did it go?
Poorly.
Not too great. Would you be shocked if you were to bet on somebody to cheat on his wife? Would it be Tiger or some person who's always been committed, had women thrown at him, and he still turned them off? The past is still an indicator of the future. For those of you who don't believe that, you're trying to tell yourself a story to justify something in this. I'm not saying the past is a guarantee. Look at Apple. Apple almost went bankrupt, and now they're in the late 90s, and now they're the biggest company in the world or something like that. So I get that. But at the same time, you have to also remember that the past will show you how they're handling things as well. How are they able to make money? And in this company, they hate making money.
Go on.
They've lost $24 billion in the last 4 years. Lost. Negative. Man.
Revenues are expected to be 16.4 to 16.8 billion in 2021.
Sick.
This is from their website, the Business Outlook.
Sick. They did $17 billion in 2011. Shares outstanding. Another shocker. Shares are going up. That's an X as well.
Oh boy.
Of course, shares are going up. You know why? Because they need to finance those losses. So they're issuing shares to finance the losses. I mean, this is crazy. All right, balance sheet. Let's see if they actually have cash on hand.
Current assets over current liabilities is pillar number 6. Even with a bad company, folks, we want you guys to learn the process, go through the process. Paul, some people are saying, listen, I'm a patron now. I got the 8 pillars. Now what? And I literally wrote in a comment like, this might take a couple years to start getting the terminology. So I said, get in that Discord channel.
It'll actually take a lifetime.
I guess
Warren
you're right.
Buffett still learns.
I
Anybody who thinks that investing is just this like, oh, let me take a few classes, I'm ready. Guys, I still read every day.
Well, the problem is, Paul, is a lot of other YouTube channels just say, put your money in these crazy rocket emoji stocks, and that's how easy it is. Why would you even learn?
And in this market, it's very easy.
Of course it is.
You know, I had a FaceTime last night with Darnell and Rahman, our weekly FaceTime.
Go on.
And Darnell and Rahman both telling me they're just like, guys, making money in stocks and real estate is so easy. Literally, those are words coming out of their mouth. And they're laughing because of course, they've been learning from me for 12 years. And they're just like, Paul, that's crazy. I'm like, it is crazy. And eventually something will happen where it doesn't become easy anymore. And those same people will say that making money in stocks is impossible. Those same people will say making money in stocks is impossible at some point in the future.
Well, they're saying that about the real estate right now with being so high and not finding many properties.
I see. I'm surprised by that. I know people who are getting into real estate now because they see how much money is being made out there.
I see. Current assets over current liabilities for Teva International.
12 billion in current assets, 12 billion in current liability, 12.16 to 12.1. So it's a check mark.
The first glorious check of the day.
Barely. Like literally, I think I have more money in my account that covers the difference.
And this international pharmaceutical company got it. Okay, should we dare look at the free cash flow?
Guys, I want to show the free cash flow just to brag about our website. Guys, free cash flow is cash from operations less your capital expenditures. I added this line to the investing section of the free cash flow statement. This is only on my website. And guess what? Right next to it, do you see what this says, Seth?
What a 5-year average? No, it doesn't. You little
Guys,
weasel.
I make this as easy as possible. I'm going to save you. Literally, we had people, when they first joined the Patreon, saying, I was doing the 8 pillars. It took me 25 minutes to do 8 pillars.
Uh-oh.
I just did it for you.
And
Look
for
at this.
me,
Here's
really.
the ad. I don't have to ask Seth anymore. Hey, Seth, can you please add these numbers? Because Seth doesn't understand how to use a calculator for some weird reason. Seth is literally the worst at using a calculator. So now, even though you have the average here, you still want to look at the history. Look at this, Seth. Look at these billions being made along the way.
Billions and billions.
And then plummet.
Uh-oh.
And then plummet. Guys, this is too inconsistent of business. If you think there's a play here, now one way to find, let's talk about this.
Go ahead.
One way to find, so this is an X as well. And by the way, for everybody who's never used our site before, because they don't have it available, here are the 8 pillars.
Look at that thing.
And this is gonna be centered here shortly. I mean, look how terrible this is, but look how awesome the thing looks. And it tells you all the numbers, not applicable. Oh, price of free cash flow is 7.45 though. Check mark. That's because we had 5 billion in the first year of it.
Yeah.
So, guys, one of the things I want to understand here is when you look at your metrics down here to determine if this is a company, one of the things I would look at here is the price to sales ratio. Because what you want to understand is you want to look at other pharmaceutical companies that are generic pharmaceutical companies. Let's say they're selling for 2.5 times price to sales. You look at this saying, okay, why are they selling for 0.77? There might be a value play here. This is how you determine when the numbers are bad, whether there might be a value play or not. Go look at the comparable companies in the industry and see what their price to sales ratio is. Because it doesn't matter how much money they make. It's basically market cap divided by sales revenue. That's it. So if you can figure out, now if all the other companies in the industry are 0.7 to 1, there's no value play here. Just stop. But if it's something where it's like, hey, they're selling for a third of the price to sales ratio, then your next step is saying, okay, can this company turn it around? Are they working on turning it around? How are they going to turn it around? And when it does turn around, how much money will it take to turn it around? And what will they get to? This could very well be a value play.
Turn around. I watched Old School last night, by the way.
Did you really?
I mean, I watch a movie all the time. It's like a constant loop in my mind.
Well, Seth tells me how busy he is at night working, and then he's really watching Old School.
Let's
Probably have it on the background, though.
Yeah, I'm editing photos, wedding photos, Paul. Just another beautiful wedding last weekend. So gorgeous.
Yeah.
Should we head over to Mo for trading?
Can I finish my statement
I'm
real
sorry,
quick?
please do. I just interrupted you.
Yeah, you did.
Go ahead.
So this is how you look and see, is there a value play here? If you don't see these things, then just move on. There's so many, to me personally, I'm not even gonna look at this, because I look at it saying, I don't wanna deal with the hassle of doing all the research on a company that just has every number bad. Move on. Now we go to Trader Mo.
Yeah, for those of you in the Bid and Ask Nation, our Patreon, the middle tier with Mo, and you're trading momentum, here he is. Wonderful. You look great in red, by the way.
Thank you.
That's not red, that's salmon.
You look great
Drop the
in
mic.
salmon. Go ahead. Thank you, Paul.
Orange.
Damn it.
All right. So, contrary to everything that happened over there, this is where
Aren't
you
you glad I didn't say salmon?
Go ahead, Mo. I'm just going to cut his mic off. These
This
jokes
is where
are-
you completely separate investing from trading, because yesterday, as we saw, we had that nice, what was it, 7% run up, and that gave us a movement of our red line over our yellow, which is a good indicator of a positive trend, and it moved into our sweet spot. So we did get a green candlestick today for the very first time.
Giggity.
Your bid and ask difference is 1 cent. So for me, it's 11.76. Throw a tracker share. Actually, you know what? The hell with the tracker share. Go ahead and tomorrow, if you get a candlestick that breaks out like that, go ahead and buy it for the first time. This is actually a pretty good stock to trade. But remember, this is where we separate value investing from trading. This is something good that I think everybody should take a look at.
You know what? The hell with the candlestick. I don't even know what that is, but
Tracker share.
no.
Yeah, he said tracker share.
The patrons, if you know Mo and you're in the Bid and Ask Nation, you will know what this guy's talking about. That was hilarious. I don't know. This is just awesome. Final take on Teva, Paul.
I'm gonna ignore it completely. For me, but from a value fundamental standpoint, I'm ignoring it. If I'm gonna try to make money off it, it's gonna be off charts or momentum, and we haven't really started talking about momentum yet, but it'll happen at some point.
That's our take on Teva. We're sorry if we upset you, but it doesn't meet many of the pillars, and it totally stinks. Our final take is if you love what you're hearing on the show, you can join our Patreon. The link is in the description below. I say this all the time, but you can join our incredible community of Discord members. Paul, you're very proud of what the members are doing when they interact with each other. They help each other. It's just incredible.
Yes, I am, and I would like to also show,
Show them the chart here.
guys, this is everything money and what you get. These are our quote unquote competitors.
As a patron, you will get the software you saw on the screen. You will get access to everything that Paul's showing you.
And I'm making more stuff. Real estate calculator, stock value calculator, house flip calculator, momentum trading. The Discord community is one of the biggest aspects. We have over 1,500 people that all talk. Now, it's not one chat room, so don't feel like it's gonna be overwhelming. There are 30 chat rooms that discuss every sort of sector, every industry. You can get access to Mo and I in some of these. But here's the big thing. See this $14 here? It ain't existing anymore. It's currently 17 bucks. It was 8 bucks 2 months ago.
Yep.
Whatever price you pay for the minimum level, you get all of these. $199 a month, $199 a month, $35 a month, and you don't even get everything. This is a no-brainer, guys. I talk about this because I'm really building this community. I'm really building this channel to focus on the software and the community. I think we've done a great job doing that. I literally get text and messages from people every single day. We all do.
Yes.
Telling us it was the best decision they made. Guys, it's $17 to get all of this. At some point in your lifetime, you're going to want this. And when it's $49 a month, you're going to regret buying it. I literally have people who've said to me, Paul, I just bought it because I know I'll need it at some point. And I don't want to pay $49 a month for it.
We've heard that for sure.
We've heard it all the time. It's like, why do this?
So the point is, if you get into the Patreon at this price, You get a wide range of access to Trader Mo, to Paul, to myself, our portfolios, fireside live stream, exclusive content. Paul, that real estate patron video you did yesterday was on fire. Paul went live for just our patrons for 90 minutes and talked straight real estate. We do exclusive videos for you. It's an incredible community. It's growing. It's growing like crazy. And
we add 1,000 people a month. 600, 700 people a month, essentially.
And we're giving away 2 Teslas as a
yeah.
patron. You get automatic
By the way,
entry.
you know what I saw yesterday?
Please go ahead.
CBS Sports, CBS, a multi-billion-dollar company, is doing a bracket giveaway. They're giving away
Go on.
a Nissan Rogue. We're giving away 2 Teslas.
2 Teslas.
They're giving away a Nissan Rogue. CBS is worth billions of dollars.
Uncle
I am
Paul
not.
is not.
This is my point. Like, this is such a no-brainer. Like, look at Yahoo Finance, all these X's. This is crazy, guys. Either way, it's wonderful. Join it. You're not going to do yourself. You're not going to hurt yourself by doing this. Try it out for a month or 2. If you don't like it, then cancel the membership. I think you're crazy to do that because everybody, you're going to love the chat. We literally have people who become friends in the chat.
Yeah,
You know
it's
what I
great.
mean?
Anyway, that's our take on Teva. It's a terrible company. Argue with Paul in the comments. We love you.
I'm not saying it's a terrible company. I'm saying the stock is not good.
That's right, Paul. I misspoke.
Yeah.
Fondle the thumbs up on the way out. I love you guys. See ya.